Hey everybody, this is Charlie Dobbins. I want to welcome you to another one of the Multifamily Investing Academy's Masterclass Elite Group Coaching calls. Now this particular call is going to be kind of an educational call. I think the next call we do is going to be an interview, another one of our interview calls with an investor. The reason for this particular discussion, understanding multifamily financial statements. Now, if you've been in the masterclass program, it's typically in the fourth month you will be given the training program on how to read a multifamily financial statement like better than your accountant. And this particular discussion, we are not going to get into that full analysis. That particular educational program is 4 videos. It's almost 2 hours worth of training on multifamily financial statements. But the reason why we're going to be talking about it on a particular aspect of it on today's call is because I've had 2 conversations with students regarding particular aspects of the financial statements, and I think it's important that I explain to you what those conversations were and why we're going to be going over them today. The first one was with a student probably about 3 or 4 months ago, and he had asked me for a listing of all of the expenses that you could typically see on a multifamily statement. And if you understand how the property management systems work, like Rent Manager or Yardi, you create a chart of accounts the same way you do with QuickBooks. You create a chart of accounts and you can get as creative as you want. So when he asked me for that, my first reaction was, oh, vey, I can't, there's no way I can give you all of that information because it's only going to come back and haunt me because you're going to tell me that I didn't tell you about this particular expense. And so, as an attorney, I kind of looked at it from a liability standpoint. I'm going to, I'll have an issue if I tell him this is the list of expenses. So, but I've since think that I've kind of figured that problem out, and you're going to find out the answer right now. And of course, as an attorney, what I've decided to do is shift the liability to a third party and blame it on them. So that's the first part of this discussion as far as financial statements. The next part of the discussion has to do with a conversation I had with a student yesterday regarding capital expenditures. Now, let me explain to you what happened in his particular case. He's trying to come up with an offer on a property. He happens to be in the owner forum, so I'm helping him draft the letter of intent and make sure that it goes out the right way. He is off from the purchase price by a considerable percentage, and the seller says, well, no, you have to understand something. Some of our expenses should be carved out because they're not really operating expenses, they're really capital expenditures. So those should not be included in your NOI calculation, and when you take those out, the NOI goes up and our purchase price goes up. And so here, let me show you. And he sends over an Excel spreadsheet with 850 lines of expenses, and he highlights those that he says should be excluded. Now, my first issue is with the fact that we are doing his accounting for him. And it just seems wrong to me that we are helping him get to that particular number. His accountant should have done this, long before he decided to sell the property. His books should be cleaned up so that we don't have to guess as to what capital expenditures are. Now, my client and I kind of went back and forth as to, was this an expenditure? Was this a CapEx? Was this not a CapEx? And so I decided to show you where you can find what is a CapEx and what isn't a CapEx, but there's a little bit more of an art to it than a science. So that's what we're going to be talking about in today's discussion as far as financial statements for multifamily property. All right. So here's my disclaimer. You're always going to hear this one. I'll say it again. I'll say it a million times. That way nobody can ever say I didn't say it. I'm a lawyer. I'm not your lawyer. Get a lawyer. Get a lawyer in the jurisdiction that you're doing buying the property in. I will help and work with your attorney every step of the way, but I cannot represent you. And I'm very clear about that. So what role am I playing here? I'm your consultant. I'm your coach. I hate coach, I prefer consultant. But I will act as if I am an attorney I will conduct myself in that manner. I'll make sure that, I'm going to cross all the T's and dot the I's. So that's my disclaimer. All right. Now let's talk first off about what is a capital expenditure in multifamily, because this is where we were kind of going off the rails a little bit in my conversation with my student yesterday. Now, capital expenditures are funds used to upgrade physical assets that are not part of normal repairs and maintenance. This type of capital outlay is made by companies to maintain or increase the property. Capital expenses have a useful life and can be depreciated. All right, now I got this. Did a little search on the internet for capital expenditures for multifamily, and I got this from this particular website. This website happens to be former clients of mine who have done very, very well. So I'd recommend you go check out their website, tell them I said hi, and this is, you can see exactly what they're doing. But let's kind of go through this definition so you understand a couple of the facets of it here. Used to upgrade physical assets that are not part of normal repairs and maintenance. Okay, whoops, let me go back. Nope. Let me go back here. Previous. Okay. It's not part of normal repairs and maintenance. Normal repairs and maintenance would be considered an operational expense, and it would be used in the NOI calculation. Capital expenditures, the funds for capital expenditures are not used in the NOI calculation. Now, take a look at this next line. This might help you understand why we have capital expenditures. This type of capital outlay is made by companies to maintain or increase the property. You will, if you go to a bank, or most banks, especially Fannie Mae, they will make you set aside reserves for capital expenditures. Why do they do that? Because they want you to reinvest in their asset, in their collateral. They don't want their collateral to lose value. So they want you to every year outlay more capital to maintain or increase the property. It's a way for the lenders to maintain the asset and maintain their collateral. Now, capital expenses have a useful life and can be depreciated. They can show up on the balance sheet. They will always be aligned. They should be aligned below the net operating income calculation. So that is the difference between capital expenditures and expenses for net operating income calculations. All right, now let's think about this for a second. This is a great website. I recommend you go check out greenstreetadvisors.com. But this should really lay it out here for you. Check out this, and all of these documents I will post on the membership site under the group coaching call for this call, along with this recording. So you'll actually have the documents on this, and you'll be able to figure it. You'll be able to look at it, and you'll be. Let me just see. So you'll be able to look at this and get back to it anytime you need to. It'll be right there on the group site. So take a look at these. They have repairs and maintenance expenses, and then they have capital expenditures, and they break the capital expenditures down into 3 types of groups, okay? And this is actually very interesting, because this was something that my client and I were going back and forth over yesterday, based upon what the seller was saying was a CapEx, and I was saying that was not a CapEx. Take a look at what the repairs and maintenance are. These are the expenses that are going to show up on the net operating income calculation. Small dollar jobs and projects, most turnover costs fall into this bucket. It includes interior painting, all right, as opposed to exterior painting, landscaping, snow removal, miscellaneous small dollar building repair items, repairs and maintenance type of items. That's what you'll find in the operational expenses, okay? Now the CapEx side, let's look at this a little bit differently. They break it up into recurring or non-recurring or infrequent expenditures, and then revenue-enhancing things like kitchen and bath upgrades, televisions, extensive exterior and interior work, new amenities. You look at CapEx includes new roofs, parking lots, HVAC and window replacement, floor coverings, appliances, cabinetry, and exterior painting, okay? Let me tell you what one line item that my client and I were going back and forth over, and then I went in to see my accountant this morning, whose office is right on the other side of mine. He's my property accountant. He's not my tax accountant. And we had the discussion regarding carpets. All right, now carpets, according to what you're about to see in a moment, carpets would be considered a capital expenditure. And I had an issue with that because on all of my properties, we charge it off as an expense, as an operational expense. So, by doing that, we, are actually hurting ourselves a little bit, but it's more of a realistic picture of what it costs to run the property. So what that means is that the cost, according to Fannie Mae, the cost for carpets should be charged off to the property below the line as a capital expenditure, and therefore it increases the value of the property. We're not paying for it. Now, what I do is I charge it off in that year as an operational expense. Who's right? Well, you know what? I'll tell you something. Once you own some of these properties long enough, you realize that the cost for carpets are essentially a turn cost item, meaning that every time I have to turn a unit, I usually have to replace the carpets, even if the person has only lived there a year. And you're looking at some C-class property. Those people live in those properties hard. I am amazed at, I put in new carpet, 6 months later the people skip on me, and I walk in and look at the carpet and it's trashed. I got to go replace it. It boggles my mind, especially to think that I've lived in my house for 14 years now, and I look at it and I think, man, my carpets are fine. We steam clean them every once in a while. We keep them clean, and they're holding up very, very nicely. But in C-class property, those units can burn through those carpets. And I'll tell you something, we don't spend a lot for carpets. So that's something you might want to think about or talk to your accountant about as to how you want those charged off. Now, what does that mean for you when you're evaluating the property? If it's if there's a discussion, what you're going to do is take those expenditures and for the carpets, and you're not going to capitalize them. You're going to put them above the line and reduce the net operating income, because that is a turn cost. If you own the property and you're looking to sell it, you're going to take that number and stick it below the line. Who's right? Well, it comes down to the standard financial accounting standards and determining which is the right category to put them in. The proper category to put them in is to charge them off as CapEx. But whose side are you on, yours or the seller's? So just understand that when you're looking at these expenditures, you're wondering if they're legitimate expenditures, if there should be a CapEx, or if there should be an operating expense. Okay, but what does Fannie Mae say? And this is key. All right, let me do a little presto change over here on my screen because I want to show you this. And this particular screen is going to let me just jump over here, give you a handle on. And I'm going to post this particular document to the membership site. Okay, here, take a look at this. This is a great document because it really lays out in a text form what a multifamily financial income and expense financial statement should look like, what type of categories we have. This is the document that first client who was looking for a listing of all the expenses, this is the document he needs to have, all right? And this is when I said I'm going to shift the liability off to a third party. I'm shifting it off to Fannie Mae. So here is a full, complete rundown of all the chart of accounts that Fannie Mae has for a multifamily property. And this is what we go through in the videos on how to understand multifamily financial statements. Top line, the income, gross potential rent. It explains exactly what it is and how it works. Less the vacancy, less the bad debt, less the concessions, and then adding in laundry income. All right? Just like it looks on a statement that we evaluate whenever we're looking at a property. These are the textbook definitions of what these categories are. Parking income, commercial income, other income. All right, now take a look at some of these include other income. Obviously, I have co-op unit sales and what have you. But here's, remember what I tell you in that video on the 4th month is there's good income and there's bad income. And I know you think to yourself, how could you ever have bad income? Well, look at this. Forfeited security deposits. Is that good income or that's bad income? Because when they forfeit the security deposits, it means they skip town, or that they left, they gave you notice, but when you went in to look at their unit, there was so much damage done to it that you kept the security deposit. So that comes in as income. But is that good income or bad income? That's bad income, because now you got to take that money and hope that it's enough to fix the damage that was done on that property. And most of the time, it's not. I mean, a lot of people up here in the Northeast, you're used to having first, last, and security deposit. That's what you have to come up with to rent an apartment. I'm telling you, folks, other parts of the country, you could never get away with that. You go down to Texas, and you'll get a first month and a $200 security deposit, or sometimes they'll even waive the security deposit. So different parts of the country handle the leasing of units differently. And so when you see these forfeited security deposits, you think to yourself, boy, I hope I have enough money in there that I can make this thing work. So there are other incomes, a whole categories of other incomes. Here are the incomes that you do not want to include in there. Interest income, that's real income, but that would never show up as a net operating income calculation. All right. Effective gross income, the physical occupancy, economic vacancy, it lays it all out here. Now, here we're in the section of the expenses. This is where that student wanted to have all this information. Look at management fees, administrative expenses, and then we break down what all the different types of administrative expenses could possibly be. All right, you keep scrolling down, and then what you want to do is you leave out certain types of expenses. These are things that would not show up on the administrative. Take a look at payroll. Look at all this 401k contributions, health insurance, commissions, all the things that you think to yourself, holy cow, I'm paying a lot in payroll. And yeah, you absolutely are. I mean, you got the payroll taxes, you've got the unemployment insurance, the workers' comp, all of those things need to be included in your payroll expenses. Utilities, water and sewer, repairs and maintenance, appliance repairs, auto repairs, building repairs, all of these things are included in the net operating income calculation. All right, now check out this. Repairs covered by hazard loss insurance claims. So remember, if we look back up here under the insurance, under income, you're going to lose the insurance proceeds. That should not be considered income. All right, why? Because you got to use that money to fix something. So typically it's a money in, money out scenario. So you're not going to use the insurance proceeds and as income, and you're not going to use what you lost money on as an expense. Okay, so yeah, check this out. Here it explains it all for you. For example, unit painting and unit cleaning are classified as repairs and maintenance, but the replacement of fixtures, such as carpeting and appliances during unit turnover, should be classified as capital expenditures. That's how Fannie Mae looks at it. When I'm doing my books, I charge it off in the same year as an operating expense. So, this is a great document that will explain to you exactly how these things work. Real estate taxes, insurance, and then replacement reserves, using a minimum of $250 per unit per year. And then it comes up with the total expenses. Now it breaks down the capital expenditures right down here. So this document has everything that you need if you're looking for a textbook definition of what the categories are on your income and expense statement, and how it all works. Questions and comments. Okay, this is got nothing to do with us. All right, so that document will be up on the site by tomorrow. All right, so let me just jump on back here and pause that. And where was I? Okay, so if anybody has any questions, I got some questions. Start loading up with questions, because I'm coming down to the last slide in a minute. Yeah, carpet replacement of carpet. Is it only material or can it include the labor? So is the installation of the carpet, does that go in as a line item or as a CapEx expenditure, or does that go in as a repairs and maintenance or contract services? And the thing is, if it's a repair, the answer is if it's a repair of the carpet, it would be considered as a contract service or a repair and maintenance charge, typically contract service, under the net operating income. If it's a replacement, it would be going under the capital expenditures. So that's how you would break it up. I mean, let me tell you something, folks. You're going to become experts in accounting, multifamily accounting, when you own property. And it's just a game that you have to learn. It's really not it's not tough. I was always terrified of numbers. I love looking at financial statements now. They make a ton of sense to me. And it's just logic. It is just logic, and it's beautiful. That's what's so nice about this business. So if you have any questions about it, you can shoot an email to me. If I can't answer them, I'll take them right next door to my accountant. I'll get them answered for you. If any of you want to talk to my accountant, if you're looking to buy property and you want to do the property management yourself and you need somebody to keep track of the books, that's exactly how I do it. It's the best way to handle it. I never have to worry about my financials, and my financials are every month they're prepared by a CPA. And just as a little aside, when we got sued by the SEC, they wanted to see the financials on all of our properties, and within 3 days we turned over 4,700 pages of financial documents, and they never questioned one of them. And that's how you need to run your business. So just keep that in mind when you're looking. If you want to talk to my accountant, he's a good guy and he'll take care of you. But that's all he does is property accounting. He sets up the Yardi system for you. It's his system. Now, let me just do my last slide here to share. Okay, here we go. All right, next slide. Okay, take a look at this. Here's my plug. Another multifamily due diligence seminar is coming up. We're going to do it the 26th through the 28th in June in Boston, right at the Embassy Suites in East Boston, right next to Logan Airport. Note that my multifamily due diligence is a 2-day seminar, but this one is the 26th through the 28th. All masterclass members and owner forum members, I'm buying you drinks on the 26th. So we're having a cocktail party up here in Boston on the 26th. 27th and 28th, we're going to be going through the due diligence process, and I'm going to be teaching that for those 2 days. On the 27th, I'm taking all the owner forum members who are there out for dinner in East Boston, in the North End, and it's going to be a lot of fun. It's a great meeting. I highly recommend it. If you're thinking about owning multifamily property and buying property, you have to go to this seminar. It's the only one of its kind. Here is the website where you can read more about it, multifamilyinvestingacademy.com/due diligence. So go in there and check it out. Owners Forum members have a great discount. Masterclass Elite members have a great discount. And if you're neither one of those, you can. Oh, sorry. Here we go. I did it again. If you're not one of those types of members, then you're going to pay full freight, which is about $2,000 for the weekend. So that is it for tonight's call. Let me see if I have any more questions. These documents will be, for crying out loud. You guys always hear me laugh because there's one wise guy in the crowd here, and he wants to know if he can just come for drinks. Yes, if you want, you can come for drinks. I'll buy you a drink. But I'd love to have you at the weekend. It'll be a lot of fun. So, all right, everybody, I really appreciate you being on the call. Remember, if anybody has any questions, you can shoot me an email at info@multifamilyinvestingacademy.com, and I'll help you get on board. Hey, listen, I'm going to make an offer to everybody. Watch for an email probably tomorrow. I have 2 slots left available at the $397 price for the May Owners Forum. So if you want in, I had 2 people back out. I have 2 spots for the May owner's form at the $397 price. After this, beginning in June, it's going to be $497 until I get to my maximum, and then I'm going to start going up on the price even more. So if any of you, and regardless of where you are in the in the masterclass program, if you're just getting started but you've got some experience, I'll be more than happy to let you into the owner forum. Just shoot me an email at info@multifamilyinvestingacademy.com, and we'll talk about you and make sure it's right for you. But other than that, folks, that is it. And I will talk to you all in 2 weeks when we do an interview with an investor, and you can ask them any questions you want. So thanks, everybody, and I will talk to you soon.